Yes, hello student. I welcome you to economics class. And actually, I hope you all enjoyed the last class, the video where we treated the supply of money and the agency um, in charge of the what money supply in a given economy, which is the what the central bank. And you also have known how to compute price index and how to also find its variation with respect to the base year. Yes, today we'll be looking at the money market, the financial market. We'll be looking at the what? The financial market. Of course, when we talk about the financial market, it is simply the market in which people, trade financial securities and at low transaction. Of course, some of these securities are stock and bonds. Of course, those who don't know what is called stock, a stock is a form of shares. Of course, you've heard this before, the Nigerian Stock Exchange market. So it is also a financial market. It's an example. So we'll be discussing this in a content. When you hear the word financial market, of course, you know that it is all about what? Money. Money is involved. We're speaking money. So let's quickly look at the types of financial markets that we'll be discussing today. Of course, we have basically two types of financial markets. They are divided into two types. The money market and the capital market. The money market and the what? And the capital what? Market. Let's start from the money market. Of course, by the word money. Of course, the money market basically is the section of the financial market where financial instruments with high liquidity and short-term maturity are traded. Of course, it is a component of the economy which provides short-term funds. We provide what? Short-term funds. When you hear the word money market, just know that it is where finances are borrowed in short-term interval. Of course, businesses, they come around. Business owners, they come around, and those who are involved in this money market, majority are what? Commercial banks. You can see commercial bank. You can see their names right from the GTB, the UBA, Zenith Bank. They are all what? Commercial bank, and they involved in this what? Money market, and they lend out money to various individuals who need this within a short time frame. Of course, they also what? They charge interest in this in the loan they have given out. And also they also run short-term investments, and which we'll be discussing the tools also in this class. Very, very important. Yes, remember I did mention liquidity. Of course, by now every one of you should know what is liquidity. The ease at which something or an item, a valuable item, can be what? Converted into its actual value in money form. And then we say that what money is the what? Is the best form of what? Liquidity, because you can easily what? Use it to store your wealth in gold and what have you, in buying houses and etc. etc. Yes, let's look at instruments or tools used in money market. This instrument and tools used in money market market are very, very essential. We have a treasury bill. Of course, we know that even aside from that, treasury bill is a tool used also by the CBN to control, the lending ability of the commercial bank, and also to control inflation. So it is also a tool used in the what money market. Of course, treasury bill are government guaranteed debt instruments, issued by the CBN, um, uh, on behalf of the government, to finance expenditure, to finance what expenditure. The CBN also uses it to control money supply in the what economy. Remember that the treasury bill, whenever the government are in need of money, or there is inflation in the economy, they sell this treasury bill to what to commercial bank, and they collect the money to what to finance whatever they want to use it for. So it is also a tool used in the money market. For example, if you have and again, the treasury bill has zero risk, management. There is no risk at all, because once you invest your money in treasury bill, let's say you invest 1 million naira, they pay you your interest in 3 months. The durability or the maturity is always 3 months. Of course, the interest is not fixed; it fluctuates. It goes up and it comes down. Within the duration of the first 3 months, they may pay you 30% of your 1 million. In the next 3 months, it may be 28%, because treasury bill is managed by the Nigerian government itself, the economy itself. So is the most safe investment. Take it to the bank. I said so. Let's look at number 2. We have bankers acceptance. We have bankers what acceptance. This is another investment tool, in the money market. It is a commercial bank draft, requiring the bank to pay the holder. When I say the holder, that means the person who is investing into this tool, investment tool. This is an investment tool, also in money market. Of course, paying the holder of the instrument a specified amount, on a given date, which is actually 90 days. You can see it is also within the range of 3 months, which is 90 days. This also is an investment tool, in the money market. The difference between this one and the treasury bill is that this one has a fixed, interest rate, because bank are the one in charge of this bankers acceptance. First Bank, they operate their own. Union Bank operates their own. Every bank operates their own. So it is limited to a particular bank, and their interest is fixed. It doesn't go up, it doesn't come down. It is fixed. You can see. But that of the treasury bill, because it is operated by the government, through the CBN, it goes up and goes down based on the interest rate and the activities happening in the economy. Yes, let's look at the preceding one. We have, of course, very, very important to also note, we have the commercial paper. Of course, the commercial paper, it is a common form of unsecured short-term debt. Listen to the word unsecured short-term debt. It is unsecured short-term debt issued by a large corporation, typically issued for financing of payroll, inventories, and to meet other short-term liabilities. Why it is unsecured is this: once a given company wants to finance, the payroll for the month, and they don't have the liquidity in cash to pay, they raise commercial paper and go to a bank to source for the fund. Of course, bank don't really ask them for much, no collateral involved, which is why it is unsecured. As far as the institution asking for the commercial, the help through the commercial partition through this paper, is a big institution. Of course, bank will just honor it and say, okay, they give them the benefit of doubt, which why is this unsecured?